Look, becoming a stock and crypto investor and trader is very, very easy these days, especially when you can just download a trading account to your phone and make investments and trades any time of the day or night. Really, really simple. It means that anyone can do it. And many people are. But how many know what they're doing apart from making a click here and a click there? How many new investors have been on an online trading course? Those who were struggling and realized they needed to learn how to do it properly, that's who. Because it doesn't matter how much you think you know about trading and investing. Your chances of becoming a successor one are far more realistic if you develop one particular discipline, and that is to make investing and trading a habit. Write that down, a habit. In no particular order. The first one is you need to have a strategy. Now you might say, oh, I know that, Marcus. Well, wait. What does a strategy mean? A strategy is made up of rules, and here are the 5 rules that every strategy must have. You need to know what you're getting into and why you're getting into it. Okay, so you've got to do your research on that particular stock, for example, or that particular crypto. That's the first thing. Okay, why are you getting into that one? The second thing is you need to know at what price you're getting in. Right? Why are you getting it that high? Well, because it's going up. Listen, buy at a discount, okay? Depending on your strategy. Okay, that's when do you get in. The third one is how much money to invest. It's no good saying 1,000 here, 1,000 here, 1,000 here, because this one is all about risk management, and it depends on how much you're willing to risk. Okay, if you don't know what I'm talking about, make sure you find out, because risk management is one of the most important things. Now, the next one is when to exit at a small loss. And the last one is when to exit with a big gain. That's the risk-reward ratio. If you don't have even one of those 5, you do not have a strategy. Please rewind and watch that bit again. The strategy is made up of 5 rules. That's the first one. The second one is to write everything down in a trading plan. Now, I know what you're thinking. You go, oh, do I really have to do this? Yes, you do. This could be a half a page to a 1 page. That's all you need, but you need to write down exactly what you're going to do in every single circumstance. So let me give you an example. What are you going to do if the stock goes up or the crypto goes up really, really fast? How are you going to react? Right? What are you going to do if it gaps up? What are you going to do if it goes up really, really slowly? What are you going to do if it goes down really, really slowly? What goes if it jumps down? What if it gaps down? In every single circumstance, you need to know in advance, written down. Why? So that you don't act out of emotion. In other words, when something happens, you just go, oh, okay, let me have a look at the plan. Now, if something new happens and it's not in your plan, then you're going to get emotional, fine. But then you learn from it, and then you're going to add it to your plan. So the second one is have a plan that you can refer to in writing. The next one, number 3, is so important. It's kind of part of the plan, but I've taken it out because it's so important, and that is be realistic in your expectations, because part of the plan is to write down what it is that you want. So for example, do you want 3% a month, or is it 10% a year, or 15% a year, or whatever it is that you expect? Because when people come to us, their expectations are just interesting. For example, the amount of people that have come to us and said, you know what, I want to make £2,000 a month. And we go, okay, that's fine. And we ask them, how much do you have to invest? And they go, oh, I've got about 2,000. Wait, you've only got £2,000 to invest and you want to make 2,000 every month? That's 100% a month. Do you realize how difficult that is? To make 100% a month, especially in your you've never traded before, you're a total beginner. I can tell you, you can do it, but it's luck, and you can't do it consistently. So therefore, you need to be realistic in your expectations. So, for example, I would say something realistic is to say that in your first year, you're going to make something like 5 to 10%. That's very realistic. In your second year, you should be making 10 to 20%. And then in your third year, and this is, by the way, if you're spending 20 minutes a day, which is another point we're going to come on to, you should really be looking to make 50% plus, depending on your time frames, because if you're an intraday trader, I mean, we have somebody who made 4,000% in one year, so anything is possible, or 1,000% or 2,000%. All of these things are possible, but probably not in your first year. So make sure that you have realistic expectations. Number 4 is accumulate, accumulate, accumulate. We like to think of ourselves as the Warren Buffett of whatever it is that you're doing. Is it cryptos or is it stocks or whatever? And the point here is, and obviously depending on the strategy, is don't think, especially when you're investing, that you're going to buy a stock or a crypto and then it's going to go to the moon. Expect that it actually will go down. Now, if you are trading, you're going to have a stop loss. Okay, let's put that aside for a moment. The stop loss will take you out and then you're out to stop further losses, right? But let us just assume that you're going to be investing. I actually want whatever it is that I'm buying to go down, not up. So I bought it, and if it goes up, I'm like, argh. And people are like, what the hell? I actually want it to go down because I want to accumulate more. Like Warren Buffett, buying at this price, if I like this particular stock or crypto, guess what? If I like it at this price, I'm going to love it at this price. I'm going to buy some more. And if it goes down to this price, I might just get engaged. At this, I'm marrying it. Like I want more and more. I want to accumulate, 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 get my average price down so that when it turns, I'm going to be in profit earlier. I'm also going to make the most money because I've gone in several times, not just once. And not only that, I'm going to make a higher percentage return because if I would have gotten in here and gotten out here, that's a certain percentage. But if I got in here, 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 now my average price is here, from here to here is a much higher percentage. Number 5 that you absolutely need to be doing, which is diversify. Now, you might have heard about this before, but just think about it. Let's say you say, oh, I am diversified. I bought 5 different stocks. I'm diversified. And then you realize they're all technology stocks. In other words, they're all in the same sector. That means you're not diversified. And if something happens to that particular sector, it goes down, they will all go down. And this is really good for you to help make a decision. But let's say you have a lot of different stocks and you've done your research, right? Do your research. And you like them. Well, which ones do you choose? If you can't choose between several of them, well, easy. Just make sure that one of them's in technology, the other one's in pharmaceuticals, the other one's in finance, etc., and etc., etc., you know. Make sure that they are diversified, that you're diversified, because if one of them goes down, another one might be going up. Number 6, we're getting there, more than halfway through, is to be consistent and compound your returns, okay? So we're not talking about just doing one thing and hoping it's going to go up. Rather, what we're looking for is small profits, or could be large profits. If it carries on going, let it go. Keep going, keep going, keep going, right? It's one of the golden rules, is to let your profits run, but cut your losses short. And then take those profits and don't do what everybody else does, which is spend them. What we're going to do, yes, because we're traders, we're going to compound our money. What we're going to do is we're going to add it to our portfolio. So you've got your capital. Okay, let's say you're looking at 3%. You make 3%, you put it to your capital. Now you've got more money. Now you make 3% on that capital plus the profit that you made before. And you make 3% on that larger number. You now have a larger profit. What are you going to do with that? Are you going to? No, you're not going to. You're going to put it back. Now you have even more. Now you're going to make those 3% again on even more money. You know this, right? Compounding. Nobody does it, by the way, because they're always busy spending money. That's how wealthy people make their money, by compounding consistently, 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 until they have enough money where they don't need to compound it anymore. And then they can go and spend as much as they like, okay? So it's about building up your wealth. Oh, and by the way, to help you with habit number 6, guess what? We actually have a compounding calculator. So if you go to investment-mastery.com/compounding, you can play around with that. Just put in, I mean, we normally say, you know, start with 2,000 or 3,000, add an extra, which nobody does, they don't do it, add an extra £100 to £150 a month, and then go for 3% a month plus, and I tell you what, you'll be very, very happy you did. Try it out. Number 7 is put aside 20 minutes a day, because how are you going to do habit number 6, which is to be consistent, if you don't focus on it every single day? Now it's just 20 minutes. 20 minutes is nothing. It's absolutely nothing at all. Imagine if you went to the gym and did 20 minutes a day of just push-ups or just sit-ups. You'll be like, oh, you know, 20 minutes every day. And by the way, it goes so fast, goes so fast. It doesn't matter when you do it. 20 minutes in the morning, 20 minutes at lunchtime, 20 minutes in the evening. It doesn't matter, because hopefully you're using a strategy that doesn't rely on the market being open. And so that's what we basically tell people, and that's what we do ourselves. 20 minutes a day, you know, you press the button, count down, after 20 minutes, stop. Then you never miss out on an opportunity. It's consistent. 20 minutes a day, not more. Number 8 is keep your emotions in check. Let me tell you something. Emotions have absolutely no place when it comes to trading and investing. They shouldn't even be there. You should be getting in, dunk, I won. Dunk, I lost. It's exactly the same. They shouldn't be like, oh no, I gotta, or yeah. No, it's totally flat. You know your strategy, you know your rules, you know the probabilities of you winning, so just keep going. Because otherwise, you're going to have things like fear of missing out, you know, the famous FOMO. And then you're going to jump into something as it goes up, you go, ah, and that's just when it comes down. Right? Or you're in something and it comes down and down and down. Instead of having a stop loss and getting out, you let it run and run and run and run and run, and now you're in real trouble. Anything like panic or fear or greed or any of these emotions, please remember this. When emotions go up, intelligence comes down. So let's get rid of those emotions, and that's why you need to do everything that I said before, including having a strategy and having a plan, writing it down, and following those rules, okay? Number 9 is to be diligent and be creative. Sometimes it's a good idea to just always be on the lookout for what is the latest trend, you know, and to jump on it. Now, I know that sounded a little bit going against what I said in habit number 8, but sometimes you need to know when to follow the rules, and you know, when you have experience, then you need to know when not to follow the rules. And sometimes you could be on that stock or that crypto that you just know is going to do extremely well, and you could get 1,000%, 2,000%. And just in case you think that that's not realistic, the most that I ever made was 31,000%. So it is definitely possible. By the way, 31,000% means if you put $1,000 in, or pounds, it means that you get 310,000, which is pretty cool. So here's the thing. Be creative sometimes in saying, but what would happen if you only need to put a small amount of money in if it goes up a lot, you know? So be the person who's in early. Be creative, be diligent, be on the lookout for the new trends and jump on them. That's habit number 9. All right, we're finally there. Number 10, and that is don't do it alone by yourself. It is the hard, boring way of doing it, and you might not even get there. Look, as mentioned in our introduction, it's better to have some training or education behind you, maybe an investment course or an online course or something. That's because with the help of an expert and experienced trading coach, you can also receive mentorship and ongoing support. And this can be great because trading investing can feel lonely at times. And it may also prevent you from making bad mistakes, like being scammed, for example, which your coach and mentor surely knows all about. So in conclusion, the whole point of becoming a trader investor is what? To help you generate more wealth, right? Not losing it. So therefore you need to know what to do. Just like driving a car, why is it that we don't just get a key and drive off? Well, because it's dangerous. But it can get you from where you are now to where you want to go 10 times faster than walking, right? And that's why people take lessons and they pass a driving test. That's why it's so important. And if you want to get from where you are now to where you want to go, well, if you master the good habits of successful investors and traders, you might even achieve returns that exceed your expectations. Best of luck.